To truly understand market movement, you must first grasp the concepts of support and resistance, two of the most fundamental ideas in technical analysis. Think of them as the market's invisible floor and ceiling, constantly shaping the way prices move. Support is a price zone where buyers step in, stopping the price from falling further. It's where demand is strong enough to halt a decline, often leading to a shift in momentum. When price hits support, it often bounces up as demand increases. This bounce can be quick or gradual, but it signals that buyers are regaining control. Resistance is the opposite, a ceiling where sellers overpower buyers, halting upward movement. It's the point where supply overcomes demand and price struggles to break through. Price often reverses at resistance as traders take profits, and new sellers enter. This is a common area for short-term traders to look for opportunities to sell or exit positions. These zones help you spot potential reversals, plan entries, set stop losses, and target profits. Recognizing them can give you a strategic edge in your trading decisions. Don't treat support and resistance as exact prices, they're zones, not lines. The market rarely respects a single price point, so flexibility is key. Price may react within a general area, not a single point. This is why you'll often see price wicking into a zone before reversing. Thousands of traders see these zones, so reactions are rarely precise. The collective actions of many market participants create these broad areas of interest. Thinking in zones helps you avoid premature exits and gives your trades room to work. It allows you to manage risk more effectively and stay in trades longer. Mastering these concepts gives you a clearer map of the market, helping you navigate price action with greater confidence and precision. Let's get practical and find key levels on GBPUSD using MetaTrader 5. This process is essential for any trader who wants to understand where the market is likely to react, and it forms the foundation for making informed trading decisions. Start by opening the GBPUSD chart and switching to the daily time frame. The daily chart gives you a broader perspective, helping you spot the bigger picture trends and important price zones. Next, zoom out to see at least 4 to 5 months of price action. This wider view reveals major turning points and helps you avoid getting lost in the noise of short-term fluctuations. Focus your attention on the swing highs. These are the peaks where price reversed downward, and the swing lows, which are the valleys where price turned upward. Swing highs mark the points where sellers took control and pushed prices down, while swing lows show where buyers stepped in and drove prices up. Identify the most obvious and prominent peaks and valleys on your chart. These are your key levels, the areas where price has clearly reacted in the past. When you notice price reacting at the same level multiple times, it signals a significant support or resistance zone that traders are watching. For example, if price bounces off a particular low 3 or more times, that's a strong support level. Buyers are consistently stepping in there. These swing points are crucial because they highlight where market sentiment shifts from bullish to bearish, or vice versa. Remember, mark only the most meaningful levels. Don't clutter your chart with every minor move. Focus on the zones that have shown repeated, strong reactions. This approach filters out the noise and keeps your analysis sharp, making it easier to spot real trading opportunities. The goal is to spot the zones where the market truly reacts, not just where price pauses briefly. That's how you find the real support and resistance, by focusing on the levels that matter most to traders and the market as a whole. Now let's walk through how to draw these important levels on your MT5 chart, step by step. Marking support and resistance is a fundamental skill for any trader, and doing it right can make a big difference in your trading results. Start by using the Draw Horizontal Line tool in MT5. This tool lets you easily mark your identified swing highs and lows, which are the foundation of support and resistance. Place your lines at the most significant peaks for resistance and at the valleys for support. These are the areas where price has historically reversed or stalled, making them crucial for your analysis. Aim for 2 or 3 key levels in each direction, up and down. Keeping your chart clean and uncluttered helps you focus on the most important price zones, rather than getting distracted by minor fluctuations. Adjust your lines to get the most touches. Sometimes you'll align with the wick, other times with the body of the candle. The goal is to capture the level that price reacts to most often. Remember, support and resistance are best thought of as zones, not exact price points. Price can move slightly above or below these areas before reversing, so give your levels a little room. As price action evolves, update your lines to reflect new swing highs and lows. The market is always changing, so your analysis should adapt as well. Don't clutter your chart. Focus on the most respected and frequently tested levels. This will help you make clearer, more confident trading decisions. Regularly review and adjust your zones to stay current with the latest market moves. This habit keeps your analysis sharp and relevant. The market changes constantly, so your support and resistance analysis should evolve too. Staying flexible is key to long-term trading success. Clean, updated charts lead to better decisions and help you spot opportunities more easily. That's how you keep your trading sharp and stay ahead in the markets. With your zones marked, watch how price behaves at these areas. Price often slows and forms long wicks at support. Buyers are stepping in. At resistance, you'll see momentum stall and wicks on top. Sellers are active. If buyers win at support, price bounces up. If sellers dominate at resistance, price falls. When a level breaks, it can switch roles. Old support becomes new resistance, and vice versa. This role reversal happens as traders adjust their positions. Strong bounces or rejections reveal who's in control. If price smashes through a zone, momentum has shifted. Reading these reactions helps you anticipate moves, not just react. This skill separates pros from beginners. Here are some pro tips to master support and resistance. Start with higher time frames. Daily or weekly levels are more reliable. Keep your charts clean. Focus on 2 or 3 key zones. Update your levels regularly as new price action forms. Don't treat these zones as guarantees. Price can break through. Always use proper risk management and set stop losses. Support and resistance are guides, not certainties. Review your charts weekly to stay current. Focus on quality, not quantity, when marking levels. Practice daily to build confidence in reading the market. With discipline, you'll turn these zones into powerful trading tools.